Hello and welcome, everyone. Thank you for joining us. The Wall Street Blockchain Alliance is very proud to offer our latest webinar with our dear friends and members at Aprio and at Bitwave on the very important topic of understanding the broader compliance implications of 6050I for digital asset transactions. We've got a lot to cover. I'll keep this brief. Let me do the brief disclaimers and usual housekeeping. Please keep in mind that this event is offered only for information and education purposes only, and nothing is discussed is intended to, pardon me, is intended to be accounting, investment, legal, or tax advice. And obviously, any views or opinions expressed by myself or our panelists don't necessarily reflect the views of our firms or the Wall Street Blockchain Alliance. Please also keep in mind that this event is being recorded. All attendees will be in listen-only mode, but there is a Q&A function. Please put in your questions for our three experts. We will spend some time at the end addressing the audience questions. Dmitri, Amy, Haley, good to see all three of you. I want to give you all a quick opportunity to introduce yourselves and say hello to the audience, and then we will kick it off with a really important topic. Dmitri, please say hello. Tell everyone about yourself.
Ron, thanks very much. First of all, I would like to thank the Wall Street Blockchain Alliance and Bitwave. So, Amy, thank you. And Ron, to you personally for the opportunity to present and participate in this very important special global webinar. Of course, WSBA has been an important channel partner for Aprio and its members, and one of the leading voices for guiding and promoting comprehensive adoption of blockchain technology across the global markets. My name is Dmitri Alexeev. I'm the National Technology and Blockchain Digital Asset Tax Leader. I co-lead the national practice with another partner, Mark Lee, who's an assurance partner, and we also co-lead the West Coast technology practice. We are focusing like a laser on blockchain digital asset industry. That is something that Aprio has invested in since 2013. We provide assurance stocks, advisory services, and we just became one of the 25th largest CPA firms in the United States, which is quite an achievement as we've had a lot of growth. Thank you, Ron. And we continue to, like I said, we continue to invest in this industry. We at Aprio believe that knowledge sharing is important, and that's the reason why we really support the ecosystem by embracing knowledge, collaborating for growth, and educating through discussion. So very happy to be here, and thanks for being able to be part of this very important webinar.
Dmitri, thanks so much. Amy, please say hello.
Of course. I second everything Dmitri just said. Thank you to the WSBA for hosting this and so many other fantastic webinars. I'm Amy Kalnoki, co-founder and COO of Bitwave. Bitwave is the leading digital asset finance platform. And by that, we mean a full suite of tools to help businesses that are transacting in crypto do their bookkeeping, tax tracking, revenue recognition, you name it, anything that you need as an accounting or finance professional to keep good books and records. We make a software solution for that. So really excited to be here to talk about 6050I and the implications and what we're going to do as an industry to comply with it.
Amy, good to see you, old friend. Thank you for joining us. Haley, please say hello to everyone in the audience.
Awesome. Well, I think Dmitri did a great job of summarizing Aprio, so I won't really get into that too much. But thank you for having me. I'm so excited to be a part of the group and a part of this discussion. My name is Haley Beatty. I lead the forensics practice at Aprio. As part of some of the things that we do here in the forensics group, a large portion of that is our anti-money laundering piece, which is where I come in. We do a lot of anti-money laundering independent assessments, program development, as well as just some compliance support around that.
Haley, thank you for joining us. Let's dive right in. There's a lot to cover. And again, for all of you in the audience, please do submit your questions. Dmitri, I wanted to start with you. One of the challenges that I've had in having conversations with colleagues in the crypto space and under digital asset space, when I bring up 6050I, when I bring up the challenges of these reportings, you really need to understand the basis for 6050I and how we got to this point. And that inevitably brings us to Bank Secrecy Act. How did we get here? Why is this important, Dmitri? And what's that kind of foundational perspective that everyone needs to know when we're looking at something like this?
Ron, I'm so happy you asked this question, and I think this is probably one of the most pivotal questions that if in this space, in the blockchain digital asset space, before you get into the nitty-gritty of the 6050I and compliance piece, you really need to understand why it's here. So as many in the audience probably know, we had the Bank Secrecy Act in place since 1970. Since 1970, we've had significant expansion of the Bank Secrecy Act. The Bank Secrecy Act survived the challenge in the Supreme Court, and it's now the law of the land. And essentially, the Treasury and the taxing authorities, including FinCEN, have significant and very broad authority in applying the Bank Secrecy Act. Of course, when it comes to Section 6050I and 483 compliance, this came about as a result of the Infrastructure Investment and Job Act, or the Investment Act, or Jobs Act, as some people call it. And of course, the issue here is that the act has provided to us that cash is now including digital assets, and this is representing a huge milestone from the perspective of expansion of the Bank Secrecy Act. And unfortunately, when digital assets have been defined as cash, this definition came in as a very broad definition, and the Treasury and FinCEN previously have defined digital assets as representation of value, and essentially anything that's recorded cryptographically on secure distributed ledger or any analogous technology. That's essentially how it's been defined by the United States Secretary and the Treasury. And then digital assets include everything, and they include cryptocurrency, coins, tokens, non-fungible tokens, stable coins, digital securities, utility and security tokens, as well as smart contracts. And of course, the way the legislation was passed is that there's anticipation that there'll be a very broad, this broad definition will continue to stay broad, and as the industry continues to evolve, that there's anticipation that the new digital assets as they're added will also be included in that definition. So it's a historic, I would say, development of the Bank Secrecy Act, and I fully anticipate that this law will continue to evolve as time goes by, and as we're continuing to wait for the final regulations. Now, one important point that I wanted to make, and I know a lot of companies that are in the space and businesses are wondering, we all anticipated that this form will become required on January 16th, or 15 days after January 1st. Of course, the Internal Revenue Service came out with the announcement on January 16th, so the Form 8300 has been postponed, but it's going to be postponed, and it will become relevant once the Treasury issues final regulations. And unfortunately, at this point, we don't know exactly when these regulations will be available. But we've obviously had some discussions with folks with the Treasury, and so there's a general anticipation that the final regulations will become available in the second part of the year, or sometime in the second part of the year. And once these, and then of course we'll have a more specific timeline in terms of when the form will be required to file by the taxpayers.
Dmitri, thanks for that. Go ahead, Amy.
Well, I was just going to add, I agree it was a big milestone, but in a positive way. I think this is one of the first times that a government, like a regulatory agency, has really signaled that digital assets are a legitimate form of value exchange that hasn't always been the position, or as explicitly clear as them saying, this is a cash equivalent, this is a legitimate form of value exchange. So it's a big milestone for the industry in getting that recognition.
Absolutely. Amy, Dmitri, thank you both so much. I want to interject with one quick anecdote. I have a colleague that's a technologist, and I mentioned 6050I, and I promise you, he mentioned to me, oh, I thought the IRS called crypto property. I said, entirely different agency, entirely different requirements. Amy, let's stick with what you could, and then I want to open up to Haley and Dmitri as well. When we look at the backdrop of the things Dmitri's mentioning and the importance of this kind of reporting, they become real operational and compliance requirements on a day-to-day basis. And when you look at what Bitwave does, when you look at the technology you enable and the client base you're targeting, talk a little bit about those requirements, and A, why they're important, and B, what might those challenges be? And obviously, Haley, from a forensics perspective, we'll go directly to you as well. But Amy, kick us off.
Yeah, absolutely. I mean, just gathering and collecting this information is really important, and it can be really difficult when you're interacting with the blockchain. If you think about the various types of activities that could potentially fall under 6050i and 10K. And just even thinking about 10K, when I was looking back at the history that Dmitri just mentioned, you know, $10,000 in 1974, 1970s or 80s, that today is equivalent to like 30,000 plus. I mean, and that was literally talking about like a stack of cash, which was probably, you know, more likely to be shady because people were interacting in checks and credit cards and things like that back then. So if you're using that much cash, all right, you know, I understand the need. But today, like there are so many very legitimate and everyday crypto transactions that are over that $10,000 threshold, mining rewards, staking activities, you know, validator node activities, airdrops, like you name it. There are a lot of very, very normal business transactions. And so with Bitwave, we've built out a lot of the vendor onboarding tools that you as a business would need to help track it. We also integrate a deep two-way sync with your ERP solution like a NetSuite. So if you're running your vendor management process and collecting W-9s there, sync that in or use Bitwave's one to onboard and collect. And then you can run a report in Bitwave for all the 10,000K plus transactions and match those. But the issues really come in the crypto and digital asset space is when you don't necessarily have a W-9 for someone. Like blockchains themselves aren't issuing usually a W-9, or someone doing an airdrop might not include their TIN in that info or physical address in that information. And so part of why it was delayed and additional clarity was needed is because there was no way to necessarily immediately comply with a lot of these transactions, even though they are for very clear business and trade purposes.
Amy, thanks so much. Haley, weigh in on this. And just to add to that a little bit, I've got to imagine forensics has made you busier than ever in a crypto kind of world. What are you seeing in the context of what we're discussing here, understanding the operational challenges, and weave in and help the audience understand from a KYC AML perspective, what are the important things to understand and focus on?
Sure. So a lot of businesses that we're seeing right now that have started to accept cryptocurrency, and this is different from those that are regular MSBs, things like that. We know they have their AML programs. We hope they're great. But for those that are accepting cryptocurrency as payment for services or goods, things like that, those are the ones that we really see are having the most issue gathering and verifying the correct information. So we need to make sure that individuals and those businesses have the right information on hand to be able to complete this form when it comes into play. So a part of that is there's a lot to think about when you think about your business process and the things that might need to change when this is implemented. Bitwave obviously would be a great partner to bring on to help you with all that. But then just to kind of think about some of the things that you're going to need to navigate and think about are just your policies and procedures. You know, regulators and other bodies will want to see what is your documented process. What are you going to be doing for these types of transactions? Also, how do you get your clients' information? If it's not something that you've got on file, what's your formal process for that? Have you changed it, or do you need to change it in the future to meet these requirements? Also, what about some smart contracts? Do you need to build smart contracts? Do you need to redesign any systems? And what document retention procedures do you currently have in play that might need to be updated to make sure you're gathering the correct information, retaining that information that might go into a little bit of transaction monitoring? Because we've seen, and I'm sure everybody has read the regulation, that it's not just one $10,000 transaction. It could be multiple transactions that value over 10,000. And although they haven't necessarily defined exactly what is considered that $10,000 transaction, you might need to be doing some monitoring or some type of tracking to understand when you meet the threshold to file. So there's a lot of things that businesses and companies need to be thinking about that might need to change by the time this comes into play. And that is not an easy process and a quick process to do. So people need to be thinking about that now before this is actually implemented.
Haley, thanks so much. I want to open this next question to all three of you. And one of the things we try to do on these really important webinars is I want to get a little more granular. We've been talking about information. We've been talking about transactions. Can we get a bit more specific on what we are talking about? You know, it goes beyond transaction ID. It goes beyond amount. Amy, do you want to start? Like, what are the specific data points that colleagues in this space need to keep an eye on?
Right. Well, Haley mentioned a great one, that it is the cumulative of a series of related transactions. It's important to keep track of the timeline. So it's a 50-day reporting window. And so once you pass that 10K threshold, you have that 15 days to fill out Form 8300. And as is, it includes things like the nature of the transaction. So certainly keeping good books and records of why you're receiving or paying out revenue in digital assets. So that's easy to match and include on the form. But then it includes some more things that raise privacy concerns, especially for people in the crypto and digital asset space, like name, address, social security number, and TIN. I actually gave a talk about this at ETH Denver a few weeks ago, and I can't tell you the number of people who came up right after the session to talk to me about how passionately they felt that this was an invasion of privacy. And actually, Coin Center, if you're familiar with them, filed a lawsuit kind of agreeing with this and saying it was unconstitutional because it treats individuals or like artists and small businesses like banks. Like Dmitri said, this is originally from the Bank Secrecy Act, but banks have a different standard. You know, they get access to Fed money. They have a broader duty. It's been found that it is constitutional for them to, you know, as people at ETH Denver called it, spy on each other. But, you know, it's more reasonable that something like a bank has the processes to, you know, gather somebody's social security number and maintain that. But people in the industry, at least certainly some people, felt that this was like an undue burden to individuals or small business or minors or artists creating NFTs to really collect and maintain things like home addresses and social security numbers.
Amy, Haley, thank you both so much. Dmitri, would love to pull you into this, and I want to expand a little bit upon some of the things that Amy and Haley mentioned. You know, the four of us have been in this space for some time, and when we look at the evolution of the ecosystem of crypto, it's no longer quote unquote just Bitcoin. We're looking at DeFi, we're looking at types of swaps, we're looking at smart contracts, we're looking at wrapped tokens. How much of what we're talking about, Dmitri, when we look at 6050I and the Bank Secrecy Act, runs right into the wall of the actual business models of things like DeFi, for example, or smart contracts or NFTs? Is this a square peg round hole issue?
Ron, you know, I've had so many discussions about these, especially with, you know, as you know, Aprio does a lot of work in the DeFi space, and you know, we also work with miners. We work with folks that are you know, that are running liquidity pools and you know, have other very complex transactions. And unfortunately, you know, one of the things that, especially in the DeFi space, that DeFi companies and founders have to deal with is you know, regulatory environment, because you know, a lot of DeFi, especially companies, had to show up outside of the United States because they don't want to deal with securities issues and other issues. And now, you know, and I'm not an attorney, but what I'm hearing from very experienced legal counsels is that it's a really fine walk between regulatory compliance, tax compliance, and the treasury compliance. And what one of the and you know, and we all talked a little bit about the three-legged stool, because when it comes to compliance, you have to consider legal and compliance issues, you have to consider tax and compliance issues, and of course you have to make sure that you're working with the right vendors like Bitwave to make sure that you get the necessary support for accounting and information gathering and in order to comply with the reporting requirement. But it puts DeFi companies especially in a very difficult, tough spot, because there is some understanding in the space that if you will force DeFi companies to comply with 8300 form and especially more broader Bank Secrecy Act provisions, then they could run afoul of not being compliant with the securities laws. So that's a huge issue for the companies. And you know, more importantly, the way the DeFi works, it's decentralized finance works, is that there's a reason why it's called decentralized, is because this information is not stored or collected anywhere, and forcing DeFi companies to comply with that will create significant technological and privacy and other burdens that Amy just talked about. Because again, and by the way, you have to deal in every single jurisdiction. You have to comply with a privacy and other laws. We've had significant legislation that was passed in the European Union to protect the privacy. Same goes for the UK, and other jurisdictions are also trying to protect privacy of foreign individuals. And then the question is, who's going to be collecting all that information, and why do we have to have a burden of the companies trying to essentially to forego the model that they built their business on decentralized finance? That's kind of at the core of the issue here.
Dmitri, thanks. I'm going to rip up the script a little bit. I wanted to throw this question out for the three of you. You alluded, Dmitri, to organizations and the work happening overseas. And when you look at the bench of expertise that Aprio and Bitwave have, are you concerned that some of these regulations, when we look at BSA and 6050I and all the other regulations, are you concerned that this is pushing clients overseas? Are you concerned that it's really limiting the innovation that might be happening in the United States? And again, the four of us understand the importance of Bank Secrecy Act compliance and securities law compliance. We get investor protections, we really do, but are you concerned that this is anti-innovation? What do you think?
Yeah, I mean, I'll just say, anytime you're left in limbo, like we kind of are right now, anytime you kind of don't have that clear regulatory framework to know exactly how things are going to, apply to crypto and digital assets, I think that's stifle of innovation, because it forces everyone to pump the brakes and say pause. And so this kind of ever shifting regulatory window framework that we seem like we have, like goalpost moving, pausing, things like that, I think that does stifle innovation, just because it slows it down, because people want to play by the rules. Businesses want to have clear guidance and a clear understanding of what they can and cannot do. And so this like limbo waiting period that we find ourselves in a lot of cases, not just this, I think that can stifle it. It can slow it.
Haley, Dmitri, do you agree?
Yeah, Ron, I completely wholeheartedly agree with what Amy said, and I feel very passionate about this. And because you and I had a lot of private conversations, and that I agree with everything that Amy said. And yeah, just on a personal note, and I'm just sharing an observation with the ecosystem here for those that are listening, and probably will have some questions about this. If you go back and look at the original ICOs and the token issuers, obviously we've had a lot of uncertainty from the regulatory perspective, because we didn't know how exactly and the SEC would regulate some of these transactions. But we've seen over the last couple of years that most of the token issuers have decided that issuing tokens in the United States is prohibitive, because because of the stance that the SEC has taken. We can have a long debate on whether or not it's right or wrong, but to Emmy's point is that obviously that stifled the innovation, because a lot of the tokens that are out there, and we have lots and lots of case studies. It's not, with specific applications of tokens in terms of how they apply to specific case studies, in terms of how the innovation has been developed, especially if you look at layer 0, layer 1, layer 2 type entities that have evolved in the last couple of years. Tokens have been very, very important from perspective of driving that innovation, despite the bad rap that tokens have received, in the past 5 to 6 years. But this additional uncertainty just continues to add, and I obviously agree with Amy, and I think most people in the ecosystem would agree with me, is that by creating these additional uncertainties in terms of compliance and reporting, that also creates, unfortunately, an environment where the innovation is just not moving forward. And I know that a lot of the innovation that we've had in the past, since 2013 in the space, happened to be in the United States. People go to the US to raise capital, because that's where innovation is. We can use Silicon Valley as an example, but if this continues to be, we'll see a lot of those projects, great projects that could help drive the US economy forward, move outside of the US, and that's gonna, unfortunately, that's not a good thing.
Dmitri, thanks. And for the record, and for everyone watching, no one ever disagrees that I know with Amy, just so we're all very, very Haley,
Ron, I would like to add to that just a little bit, just so, everyone knows. For Aprio itself, we take cryptocurrency as a payment from many of our clients. And what we are seeing is a lot of companies that are very compliance upfront, compliance is very important, are really reconsidering, do we take digital assets as payment? for goods or services. And so there is also part of it, businesses losing opportunities because they are unaware or unsure of what is going on from a compliance perspective. And so they'd rather just kind of push it away than actually try to figure it out if it's not their core business. So businesses are also just losing opportunities in general because of the lack of permanent regulation and just kind of understanding of everything going on.
Yeah. Haley, thanks so much. Haley, let's stick with you for a moment if we could. I was hoping to get a little more granular on some of the items you had mentioned a bit earlier. We talked about KYC, AML. And I guess one of the questions I would have is how do you look at transactions and say that's a reportable transaction? Or more appropriately, if someone saw a transaction that they thought might be a suspicious transaction, what's the first thing you would advise them to do?
Yeah, well, there's kind of a list of things. There's a list of sort of red flags that kind of go off in my head if I see a transaction. But first of all, you should really understand, is this something that's expected from this customer or client or entity that you're working with? Is this abnormal for them? And that could be in the sense of, is it of a value that we're normally not used to working with? Does it have to do with the volume of transactions, not necessarily one? Could it also be that there is a lack of transparency? Is someone unwilling to give information or supply information? But the biggest pieces that are obvious and kind of right up front is just, is this abnormal for my customer or my client? KYC is all about knowing your client, and that includes understanding how they pay for things, how they buy things, what their average transactions are, what is your business relationship with them? Do you have the information that you need for the transaction to support the transaction? Is there a reason they are sending you these funds or doing these things? But also, do you have the right contracts in place to understand that you have the right information for them and that you should be expecting these types of payments or activity from customers? But also, as a part of that, we kind of go back to the monitoring piece, the transaction monitoring. You've got to make sure that you're staying up to date on those things too, because when you see one transaction that kind of triggers something a little suspicious in your head, you also need to say, okay, let me look into this a little bit further. Is this one transaction that I need to look at? Or could this have been multiple transactions in the past that we may have missed that could be leading up to something related to this transaction that makes that reporting threshold even higher? So a lot of it is understanding the information and the transactions in the past, the current transaction, as well as that profile for your client.
Haley, thanks. Amy, weigh in on this, please, given the amount.
Absolutely. I mean, but those kind of frameworks, like you said, they can break down in the crypto world. When you think about like staking on ETH, like, do you have a W-9 from the Ethereum network? Do they have a physical address? Do they, do you get a tax return? Like, no, you don't have that same typical type, but staking on Ethereum is a completely normal business activity. And so, I mean, it's just, that's the difficult position we're in. And you said it perfectly, Ron, it's square peg round hole, because, how I could very easily pass 10K in, ETH staking rewards in a month and not have any of the required documentation to fill it out.
Haley, Amy, thank you both so much. Dmitri, weigh on this a little bit, and I want to expand that conversation. Haley, you and Amy brought up some really important points about this kind of monitoring of the transactions and the importance of having the right tool to do that. One of the other components of this is having the policies and procedures. And I know all of you, and anytime I have conversations with colleagues that are technologists and I say, you need policies and procedures, their eyes roll, more paperwork. Let's kind of clear the air here. And I want to bring this out for all three of you. How difficult is it to create these kind of policies and procedures? Where should they go to do these?
Yeah. I'm going to go back to the three-legged stool discussion, because it's very important for each business to understand the internal processes, and that means you really have to work with all the players in your company. It's not, it's the truth of the matter is not every single company will have a chief compliance officer or chief risk officer or somebody who really understands what the ins and outs of each business are. But if you don't, you really have to make an effort to figure out exactly how you're doing business, what what controls you've already put in place, and simply put what other policies and procedures you have to have. Obviously, some items that you discover in the process will need to have an external legal advice because CPAs and other professionals outside of the legal profession can certainly help put the policies and procedures in place, but there are certain items that are more in line with practicing law, and that's the reason why you need to have an experienced legal counsel. And then, of course, you have to work contemporaneously with somebody like Haley who understands the KYC AML process, because you have to collect all kinds of information, and individuals, you're going to have to figure out the process for collecting legal names, tax identification numbers, date of birth, nature of occupation, country of citizenship. It's a very long list of things that you have to collect. And of course, then you have to figure out what systems are you going to put in place. You may already have NetSuite or QuickBooks or any other software package that you use. And then you're going to have to go to, to another vendor like Amy or Bitwave and say, what can you do to help us to implement all these processes? And it's going to be one of those things that you're going to have to work with each party simultaneously, because and you're going to have different touch points. And obviously this is something that takes a lot of time and effort. Depending on the type of business and the size of your business, this could take minimum 6 months to just to get things going, and then you're going to have to deal with a continuous maintenance process. So once you put everything in place, you will have to continue to maintain the business, and we all know that businesses, like people, go through different phases. They mature, they add different lines of revenue, they may have different entities within the affiliated or controlled group, and then you have to worry about closely held businesses, because closely held businesses also have to do additional hygiene work in terms of looking at the affiliated transactions, because you could have a number of other businesses that are not part of what you're trying to comply with, but there could be some related party transactions that you have to deal with. So it can get really complicated really quickly.
Dmitri, thanks. Haley, just if I'm reading Dmitri properly, you can't buy policies and procedures on Amazon, correct?
No, yeah. Well, I wouldn't be surprised if somebody did list some, but yes, I would not advise it. That is for sure. And I will just say, one other thing about the policies and procedures piece is, they are really key to the success of getting the information and getting everything that you need to satisfy any regulatory requirements, and just communicate all of the things that you've done if something were to go wrong. So for example, Form 8300, well, what if you don't have all of the information that you need to complete this form? Well, what is your process for that? What does it look like? Because there needs to be something in there about how do you attempt to obtain the information? What do you do if you can't obtain the information? You have to document all of those communication attempts. Make sure you have that well documented and kept and stored somewhere, so that if someone were to come back and say you filed an incomplete Form 8300, you've got something to at least back to say, here's all the things we did, here's all the communication that we had, making sure you also consulted with legal and any other consultants as well, and then just making sure you maintain those records for a really long time so that you can back yourself up. Because remember, if it's not documented, it didn't happen. So really document it, and the policies and procedures are really important to define that process.
Haley, thanks so much. I want to go ahead, Amy, if you want to.
Yeah, I would just, there are things I think that the community can do to help with this. So like airdrops, or the foundations, they could publish the required information for Form 8300 to help with it. I think, wallet, makers can warn people like, hey, FYI, this is a transaction that's above 10K. Like, you're going to need all this information. So I think if the crypto and digital asset community really embraces it and gets ahead of it and helps provide the required information for each other, that'll help people meet their guidance and their regulatory requirements. But again, that goes back to the privacy issue, and kind of contrary to what people in DeFi and things believe, is that I shouldn't have to, when airdropping you a token, reveal all of my tax information. And then, yeah, certainly Bitwave, we're integrating it with as much data as possible, whether that's your vendor management solution, where you have implemented the policies that you've established, or creating those to put the great guidance that you're getting from folks like Aprio really into play and using it every day.
Amy, thanks so much. I want to ask one question. And again, I'm going to rip up the script a little bit, but just listening to the importance of these policies and procedures, and Haley, fully getting what you and Amy and Dmitri are talking about, do the three of you see this as potentially a disincentive to some of the startups that might want to enter this space? It's an easier thing for the four of us to say to a well-funded larger company, you need policies and procedures. What does this do to the innovative startups that may not have those resources? Any thoughts?
Well, so maybe just a couple of observations, right? So we have, and I'm, we're not providing advice with respect to a Corporate Transparency Act, but if you look at other legislation and other things that happen in terms of the compliance, so we have a number of burdens that have come about in the last 2 years that have become certainly an issue for smaller entities that want to enter the market. So to the point that Haley was making earlier about the size of the transaction, I've had a couple of discussions with some of the founders just in the last 3 months. They basically said, look, we don't like the $10,000 requirement, so we're going to start limiting the digital asset transactions to below $10,000. And I also have to be very, very carefully when you put those policies in place, because if you're trying to circumvent the reporting requirements, and it kind of raises an issue on the question: are you trying to support certain activities that are, quote, suspicious? Because it's not just about the 10,000 limit, because in some cases you may have to report the transactions even if they're below $10,000, and that's something that a lot of business owners don't realize. But to your point, I think it could be a very cost prohibitive venture, because it takes time to put policies in place. It obviously costs a lot of money to hire an experienced attorney, experienced CPA, experienced vendor that can help you and design all the solutions to help you deal with this, and that creates a cost barrier for small businesses to enter this space.
Yeah,
Dmitri, thanks so much. Go ahead.
Yeah,
Amy.
I'll agree. I mean, accurate record keeping is time consuming. It is, and you have to be proactive about it. And so there's both the cost, like the outlay of cash, but then also just the time. Everyone's busy day. If you're a small startup trying to innovate, you might not have a compliance person. You might not want to designate, a certain percentage of someone's job just to be doing this kind of paperwork.
Amy, Dmitri, thank you both so much. Haley, let me ask you a question in the context of all of this. When we talk about it, it's a lot of work, policies and procedures. There's another component to this calculus, which is the penalties for not doing it properly.
Yeah.
Can you tell the audience, what does that look like? And they're pretty serious.
Yes, compliance is not cheap. That is for sure. I think there's a lot of the startups, to kind of piggyback a little bit off of the previous topic, was a lot of the startups really do struggle with it, but in the end it can break you, because the fines and the things that you can get can really just implode your business. So we're not seeing a ton as far as regulation and penalties for the small guys yet, but we do anticipate they're coming. And we anticipate that there's going to be a lot more that comes as soon as we get a little bit more clarity on the regulation. We're going to start seeing more penalties, more fines. We have seen fines, only from $2,000 to $3,000. And then we've seen fines in the hundreds of millions of dollars. So it really does vary. And it really can obviously have an impact on your business. If you're not the Coinbases of the world, you can probably pay the $100 million, but the smaller businesses, a few grand here and there can destroy your business. So the cost of compliance, obviously not cheap, but also very important, because it really can determine the success of your business.
And if I understand correctly, you can't pay the penalties in tokens. So
I don't believe so. No.
As well. Dmitri, do you want to weigh in?
Yeah. Well, I'm just going to give you a plethora. So obviously, if you're not going to comply, FinCEN and the Treasury and the IRS I mean, they have multiple enforcement tools that you could use. You could, if you can actually go through a Bank Secrecy Act audit, which, Haley will tell you is not fun. I've had a couple of those through my career. They're usually conducted by very, very experienced individuals. The IRS typically conducts those examinations. They have these folks have many, many years of experience, and they're very, very organized and very methodical in terms of how they do the examination. Of course, if they find any wrongdoing, and you don't necessarily have to have an examination for them to find to assess civil or criminal penalties, but non-compliance, and we expect that the IRS will be, and the Treasury and FinCEN will be going after businesses for non-compliance. These could add up quickly. And by the way, if going back to 15-day requirement, if you don't comply with the 15-day requirement, then civil penalties will apply automatically, and they range. You generally have to look at the same code sections that apply to other types of civil penalty, but it's section 6721 and 6722. The penalties generally start from $250 per occurrence for non-intentional failures, and and that there's always it's in the eye of the beholder, and then they could go up to more than $25,000, and those very specific limits. But we also have Title 31 that imposes much harsher criminal penalties. So you could end up with $250,000 fine or imprisonment up to 5 years for willful violations, and then and then it goes higher. It could go up to $500,000 or more, and imprisonment up to 10 years. So not fun.
They're serious.
Not just fines.
Right.
Dmitri, Haley, Amy, thank you all again for our folks in the audience. Thank you all for joining us. If you've got questions for our esteemed panelists, please put them in the Q&A. We'll address them towards the end. I also want to mention to our audience that our three panelists and my friends have made the mistake of entrusting me of sharing my screen to show Form 8300. Dmitri, you brought up this form several times. I'd like the opportunity to bring that form up. And if you and Haley and Amy can step us through that form, I think that might be useful for the audience.
Sure.
Hopefully I don't blow up the webinar, so bear with me. I think we've got it. Can you all see that?
Yep.
Perfect. Do you want to continue? Sorry, let me fix that. Do you want to step us through, Dmitri?
Yeah, sure. So let's just really quickly go through all these different sections. And again, you have to remember the one caveat which I'd like everyone to think about is this form was never designed for digital assets. So when you look at this form, just keep that in mind. This Form 8300 has been around for quite some time. It was designed for a very specific purpose. And again, was primarily put together to comply with the Bank Secrecy Act. So if you look at the Section 1, they're asking for very specific information to specifically identify in the individual from whom the cash was received. So there's very specific information they're asking for. So let's just assume that that you had a transaction, it's a trade or business, it's over $10,000 in value. Then you have to get the last name information, the taxpayer identification. You can see their date of birth, the residence address, and then you have to also have the occupation or the profession or the business. So right there, you could see there's a lot of different information that they want in part one. And remember, this form, you can't leave any parts of the form blank. If you have to complete it, you have to complete it. And there's certain parts of the form that are not completed. Then there's a section down below. Ron, if you could scroll down, I just want to show you. See where there's a section where you have to provide comments. I think it's on the second page. So anything that you leave blank, you have to provide comments. So it takes, for one transaction, it could take quite a bit of time to complete. All right.
Yeah.
So I don't know if somebody wants to take on the second part. If not, we can continue. But if you can go up again, Ron, that would be great.
Part
okay.
two. Yep.
Yeah. So let me do maybe real quick, right? So one other thing that you have to think about is that if this transaction was done or on behalf of somebody else, it's not uncommon in the crypto space to have a facilitator or have a transaction where the transaction is done on behalf of somebody else. So it says right there that if this is a person on whose behalf the transaction was conducted in part two, you also have to complete that information. So you could see it could quickly get really complicated in terms of completing that form.
Dmitri, can I interject on this question? One of the things I'm not an accountant. The three of you are always very patient with me, but I wanted to ask, and Haley, you referenced this a bit earlier. You mentioned smart contracts, and I might be oversimplifying. When it says person on whose behalf this transaction was conducted, what if it was conducted on behalf of an operating smart contract? How do we capture that in the context of Form 8300 Part 2? And none of us know.
I mean, the short answer is that I don't think you can do anything here. You're just going to have to document and say, this was a smart contract and this is what the transaction looks like. And this is why you can't obtain that information. But you have to assume in this case is that the Treasury, assuming the form looks exactly like it looks like now, right? Let's just say that nothing has changed or we don't have a separate or a different form from the IRS. Then you're going to have to describe in this instance why you're not able to obtain this information.
Yeah.
And I think, Ron, exactly that kind of issue is why there was a delay in the rollout, right? While these things are being figured out, because if you can't actually get the required information, you're just making everyone fill out, I could not get this information. That defeats the purpose of the form.
Amy, Dmitri, thanks so much. Haley, weigh in on this. And quick question for you then. A lot of the documentation we keep talking about, I've got to imagine if there's a good faith effort to actually capture the information that's needed, that kind of weighs in the favor when you kind of do this reporting. What's your perspective on that?
Right. And I kind of touched a little bit on that and making sure you have the right documented process to document how you tried to obtain the information. We're still kind of trying to figure out exactly what this is going to look like and what type of enforcement is going to be done when you don't have this information or when you can't gather the information. We're hoping there's going to be some changes, but we're not sure what it's going to look like yet. And so really making sure you're at least documenting and trying to obtain the information, I think is going to be key, but we'll just have to wait until we get some feedback before we'll actually know what needs to be done outside of just certain amount of attempts, documenting the process or any sort of partial filings.
Haley, thanks so much. Dmitri, Amy, Haley, any other items within the Form 8300 you want to go through?
Maybe just add a little ankle or a wrinkle to this with that, because we could spend a lot of time on this form, but maybe just something to think about. Because and this is really relates to part 3. If you look here, it says description of transaction and method of payment. And we see this a lot in the blockchain digital asset space, because fiat is still you still have to deal with fiat if you're a business. You could have some transactions that are significantly over a $10,000 threshold. So you could have a combination of a transaction where you receive something in cash and then digital assets. So one thing that to keep in mind as you analyze and you look at those transactions, the 10,000, so everything is treated as cash now. So you have to have a process in place that analyzes these transactions a little bit more granularly. So to the extent you have more than crypto being used in a business transaction, now we have to think about cash transactions as well, because ultimately you could get over that $10,000 limit and not even be aware of this. Yeah. And in addition, you have to think about other plethora of compliance. We have new 1099 rules that came through. You could have a transaction, and I'm thinking about like, we talked about staking and staking pools and a few other. You could have transaction that involves multiple intermediaries. So for every one of these transactions, you also have to think about, do you have to file other type of forms? You could have a specific 1099 requirements that could apply as well. So as you're working through and trying to implement 8300 process in place, you also have to do it contemporaneously with other compliance matters, like 1099 compliance, for instance.
Dmitri, thank you so much. Amy, Haley, anything else you want to add to the Form 8300? And this form is available. People can go and download this, correct?
Yes.
Yeah.
All right.
No, nothing bad.
I will stop sharing and spare the audience my poor sharing capabilities. I want to let's pivot a little bit, and we do have 5 or 6 minutes left before we hit some Q&A. Haley, Amy, Dmitri, I kind of wanted to, one of the topics we often have a conversation about is I had once heard that the pace of innovation will never be as slow as it is today. And when the 4 of us look at the pace of evolution in the crypto space and digital assets and tokenization and NFTs, I'm going back to not the politics of it, but the resources of regulators in this space, and I'm definitely ripping up the script again. Do they just not understand the innovations that we're talking about? And as an industry, what can we do to kind of change that, right? None of us are lobbyists or anything like that, but it just seems to be there's a lot of education needed from a regulatory perspective. Am I off base there, Amy? What do you think?
No, I think you're on right on target. I think that there is a lack of understanding about what the nature of these transactions, what people are doing, and why they're doing it. Because it is a fast-moving industry. There's something new every day. That's what I love about it. Like there's always something new, and so certainly, I think that the innovation is happening faster than the understanding from folks who are outside of the industry. It's faster than they can keep up with.
Amy, thanks so much. Dmitri, Haley, do you agree?
We're only going to be as good as our ability to educate. And, education is something that we need to do a lot more. Obviously, WSBA is a great forum and an organization to allow us to have a conversation with governmental agencies. As we all know, governments, including the U.S. government, have very strict process in terms of how the interaction is done. And obviously, I know that WSBA has made a huge effort to talk to the government, to have the government being able to have full participation in conferences, in being able to hear the voices of the industry. And I would highly encourage everyone who is listening to this webinar to participate through WSBA, to have this conversation with the various governmental agencies and various stakeholders. I could tell you I've had a lot of interactions. I was very fortunate. I've had a lot of interactions with the folks from the Treasury. I served 3 years on the ETA committee. The government is very, very much interested from both the policy perspective and implementing the regulatory framework, sound regulatory framework. They are interested in learning about the industry. They're interested in putting together policies that work, because you also have to think of it from their perspective. If I was an official in the government and the Treasury, I would have to think about how to be able to enforce all these laws, because a lot of times when the government, when the Senate and in Congress, when the legislation goes through the process, it's all fine print, but interpretation of it and implementation of the compliance, and especially the enforcement, that's a huge burden for various administrative agencies, and Treasury, of course, is a very large organization. To put something in place always takes time. So we are in this. I would say we always, the industry keeps moving at the speed of light. The government is always trying to catch up. It's always going to be like this. I don't see that being any different anytime soon. I guess the question is, how far along are we going to be compared to where the government is, and are they ever going to be able to get close enough? I think we are getting there, but obviously, it's going to take some effort. But again, I'm encouraging everyone here who's listening today to participate through WSBA, become a member. Work with Ron and the team. We have excellent working groups here, excellent executive committee. This organization can help a lot to move and speed track and resolve exactly this issue, to educate the government and to get them on board from the compliance and regulatory perspective and the policy perspective.
Dmitri, I now owe Dmitri 2 beers. Next time.
Yeah.
Dmitri, thank you for the kind words. Amy, Haley, weigh in on some of this perspective. And Haley, you in particular, I want to raise one thing too, because it's not a politics conversation, but
Right.
I often have conversations with colleagues who are like, well, we got to get through the election. If administrations change. And I've often tried to explain, when we look at BSA, for example, that's not going to change no matter who's in the White House.
No, that's right. And, I'll probably say what a lot of people don't want to hear is that, we all focus and we all have our concentration, right? We are innovating and we are moving along and doing the things that we want to do to help our businesses economy grow. However, as part of that, this compliance and the BSA and all that has one main focus: detection and deterrence of money laundering and terrorist financing. And this reporting and all the things that you are doing, I had a conversation with an FBI agent last week. It's helping, it's working. We are getting a lot of the information we need because of these regulations, reports, things like that. So The work is not going unnoticed. The work is being read by someone, is being put into place. So it's really important that we are also doing this with the understanding of what they're trying to focus on is the detection and deterrence of money laundering and terrorist financing. So it's important for us to keep that mindset as we do progress to say, as we are progressing and innovating, what do we do to make sure these technologies, these new functions remain in good hands? And it's just something we have to think about as we innovate, but it does, cause concerns, and we have to make sure that we are still staying focused and that we are still also kind of protecting people along the way.
Right. It's always that balancing act between the very important work of, anti-money laundering and stopping financial crimes and the privacies and undue burden on businesses and individuals to track and maintain very personal information on another American citizen. So it's always that tension, always a good tension, I think.
Haley, Amy, thank you both so much. We've got a couple of minutes left. Let's look at some of the Q&A. Shout out to our friend Mark Lee. Mark, we missed you in New York yesterday. It's a good thing you missed the weather. I would say you all look great. He's clearly talking about Dmitri, Amy, and Haley. So thank you, Mark. Ben Gregory, thanks for joining us. Quick question. I want to throw this out for the panel. How does Department of Treasury actually review Form 8300? Do they have the technology or staff? Haley, Dmitri, Amy, this kind of goes to what I mentioned a bit earlier. There's this image of, are there stacks and stacks of 8300s that like millions of different agents are going through? What's that process? What does that look like?
First of all, I'm just gonna say I'm the least photogenic person in the world. So it's the only difference between now is that I've let my hair grow. So that's the only. But usually I keep it very short. But to the question about the how the IRS or FinCEN reviews the form. So one thing that I'd like everyone to keep in mind is that the IRS will be the beneficiary and the significant beneficiary of significant technology improvements. We'll see. In the next 10 years, as much as $80 billion, 80, of invested in the IRS infrastructure. A big chunk of that money is going to go into infrastructure as well as enforcement. The IRS is in the process of hiring a lot of different agents, and they're going to be focusing on different things. Now, in terms of how does and I'll let Haley jump in and tell you about how FinCEN works. These forms will be filed with FinCEN, and these are, unless you have, 10 less than 10 forms to deal with, then you don't have to worry about it. You can actually file it on paper. But majority of these forms, significant majority of these forms, like 99.9% will be e-filed with FinCEN. The government does have the tools to look through these forms, and they have the tools to, for instance, if you leave certain parts of the form blank, that will likely generate some sort of a notice from the IRS saying your form is incomplete. So then you have very little time where you have to react and either amend the form or file the complete and accurate form with FinCEN. But they do have the tools and the technology to review these forms and flag those forms. And at the end of the day, if they believe that you filed an incomplete and accurate form, they can always come back to you and ask you to file the proper form.
Dmitri, thanks so much. Go ahead, Haley. Did you want to weigh in?
Well, and I was just going to say, from a FinCEN perspective as well, what we've been able to discuss with folks, they're not super lenient in how they talk about these things. But what we do see is, yes, if they are working a case or they are working something that specifically has a wallet that they're looking for, or a name or an SSN, these all go into this major database where they're able to go in and search this information. So the more information you can provide on Form 8300, suspicious activity reports, CTRs, all that kind of stuff, the better, right? Because ultimately they are linking a lot of things together. And, I don't know if somebody's just going through the database one by one, row by row, but they are being utilized and they are being searched. And then also they will go to different agencies and different departments depending on what options are checked, locations, values, and things like that as well.
Yeah, but going back to your point from just before, Ron, is, do all these agents, do the agencies have the deep technical knowledge and understanding of DeFi and crypto and wallets and blockchain to fully grasp, or is there still some education maybe that is needed there?
Really good point, Amy. Thank you so much. Haley, thank you all. Closing comments. Dmitri, let's start with you. We'll have a minute or two. Tell us where people can learn more about you and certainly follow up on the great work that you and Haley and the rest of the team at Aprio are doing.
Again, thanks very much. It's a great forum. I really enjoyed having this global webinar, and I'm hoping that those individuals that have not been able to listen to this will spend the time. And I know we're up almost April 15 is almost upon us. So but for those that have not been listening, I'm hoping they'll listen to this. So just a couple of things to think about, and those are all important things. So we talked a little bit about the three-legged stool today, right? You got to have the right advisors to support you. Make sure you have the right attorney who's got the necessary compliance, regulatory compliance experience, and security experience. Work with the right CPA firm who's got the knowledge and experience, and can help you and grow with you, and have the right vendor. Obviously, we'd like folks to come to Aprio to get assistance with the AML KYC implementation. I'll let Haley speak to that a little bit. And Amy's here. Go to Bitwave if you need help with your software support and implementing your policies and procedures. But you've got the right people here to help you. That's I'm going to leave everyone with.
Haley, Amy, any closing comments from either of you?
Well, thank you so much for hosting this webinar today. It was really, really fun. I'd love to plug, if I can, EDAS, Bitwave's annual conference is coming back in July. So we'll have important conversations on compliance and accounting and on-chain finance. Ron has been a wonderful panelist and host the last few years. Love to have you guys back. So July 24th, the day before Bitcoin conference in Nashville. So definitely check out edas.live, Bitwave's annual conference.
Definitely looking forward to it. Haley, Amy, Dmitri, thank you all so much. Your expertise and thought leadership is always greatly appreciated. Thank you for everyone who joined us. For further information, drop us a note, info@wsba.co. If you have questions for our panelists, we'll certainly reach out and let them respond to you as well. I'm going to end it there. As always, a great time, always a lot of fun. We didn't even talk about taxes. We didn't even talk about a bunch of things I want to talk about. So stay tuned for probably a further event as well. But we'll leave it there. Thank you all so much. Appreciate your time.
Thanks, Ron. Have a great one.
Bye.